Sometimes you just need to rant. And today is one of those days. The VinFast Black Spade merger was a deal investors were very enthusiastic about. It valued VinFast stock at roughly $23 billion, more than the market capitalization of Rivian Automotive, Lucid, or Polestar Automotive. All three of those EV startups have some traction with investors. Who in the heck is VinFast? It's a Vietnamese manufacturer of EV cars. And here they come. I mean, it's not a bad looking little car. I saw it, I think, last year at the fully charged show down in San Diego. But listen to this. At $18.50 a share, Thursday's closing price, VinFast was valued at about $43 billion, just short of General Motors' market capitalization of $46 billion. It closed at $85 billion today, close to the combined value of Ford and GM and over 10% of Tesla. VinFast, though, already has, they do have significant sales and manufacturing capacity, two things that investors have used to differentiate EV startups. The company delivered 3,800 EVs in April, or a run rate of about 48,000 cars. That's the most recent month that we have data. We don't know if it's profitable, probably not very profitable, probably losing money, probably losing a lot of money. It is also selling EVs in the US. Americans bought 740 of their VF8 SUVs in the second quarter, 740 whole cars. Well, VinFast has the capacity to build about 300,000 EVs a year. We all know about ramping up, but so they're in the process. It has also broken ground on a $2 billion plant in North Carolina that has a planned initial capacity of another 150,000 vehicles a year. All that's well and good, but to value it, I mean, give me a break. To value it at those levels? All right, VinFast, their 2023 sales should fall in the range of about $1.8 to $2 billion. 1.8 to $2 billion. Okay. So 1.8 to 2 billion. Let's look at Rivian. Rivian will have about double that, about $4 billion in sales. They're valued at $19 billion. Lucid will have $800 million in sales. They're valued at $15.5 billion. And Polestar, which will have $3.1 billion, is only valued at $8 billion. Now, all of that makes total sense to me. And then, so please keep trying to convince me that Tesla is even closely to being fairly valued at $738 billion this morning, with $23 billion in cash, no debt, sales of $100 billion, and profits of 10%, new capacity being added to take the sales up 50% per year. And now we can start talking about the other divisions. So if the energy division was IPO'd right now with approximate sales of $20 billion this year and approximate profits of $4 billion this year, and double that in 2025 and probably double that again in 2026, and that is not counting other revenues that might come in from just those services like maintenance and arbitrage. Well, with an estimated $400 billion in sales within 7 years and $100 billion in profit, about Apple's profit level, what would that IPO go for? So you should be able to have a pretty easy way of telling a story of an Apple-sized profit in 7 years. Shouldn't that company be worth at least $1 trillion right now, with a serious chance of being worth $3 trillion in 7 years, with actual product being manufactured, actual known costs, actually known about their TAM, actually known about their competition? All of it is easily configured with current profit multiples many times higher than these companies that have no profits now and no really ability to prove that they'll have profits anytime soon. Well, then we could talk about the potential for semi-trucks, charging stations, FSD when solved, robo-taxis, insurance, other SaaS that is going to come along with the cars, and the biggest prize of all, Optimus. The good news is that all of us are sitting on a freaking rocket and the fuel is being loaded, and the investment community seems not to get it at all. But they'll turn right around and put lots and lots of risk capital into a company that currently has a couple of $1 billion in sales. It is mind-blowing. Well, that's my one rant. Let's talk about rant number two. The Fed has to stop now. It needs to issue a statement now. tomorrow, pause in November, review for December, even offer the possibility of a drop in rates in November or January. They didn't listen to Fitch the first two times when they downgraded the U.S. economy, and then on another day warned about downgraded some banks. They didn't listen to Moody's last week when they downgraded banks. Now Fitch has warned that they might downgrade the entire banking sector and the gold standards in the banking standard, J.P. Morgan and Chase and Bank of America. The Fed's own economists have declared inflation over. I've been reporting on this for weeks. Powell himself has said that the housing issue is a lagging indicator and appears to be going lower. Every single reporting agency and every company that reports on rents says they are flat and have been flat. Commodities are coming down and falling, and they have plenty of room to fall before they get back to pre-COVID levels. Used cars appear headed lower. New cars are very likely headed lower. And then we get the productivity. The productivity numbers did a huge reversal in Q2 compared to Q1. Q1 was negative on productivity. Q2 was strongly positive, I believe at around 3.8. This should have been obvious to them. If it's obvious to me, I don't even have a degree in economics. I've been talking about the reversal in productivity for months, and that was on top of my echoing the Cathie Wood rant on productivity taking us into deflation, good deflation due to tech and GPT. So the remaining issue is labor. Fed members, here is my plea. Don't you think businesses are working overtime right now to find ways to employ tech to reduce labor? They've been looking at a labor shortage for 3 years. Don't you see the headlines about what GPT is going to do to those labor costs? Yes, we have shortages, but businesses are nimble at figuring out how to deal with that when they aren't overwhelmed with factory shutdowns, supply chain problems, and other COVID-related issues. You have to know that the C-suite of the major companies and the owners, the entrepreneurs at the smaller level, they are thinking all the time right now, how can I lower my need for labor? When labor's this short, I need to find ways to use less labor. And then all of the headlines that were around what Elon Musk did when he took over Twitter, turned it into X, and cut 80% of the workforce. Everybody was all Twitter about that. Please, Fed, hear me. Right now, before you break something, announce the pause. Offer hope of reducing rates. Nobody's going to raise their prices tomorrow. No small business can go, oh, now I can raise prices because the Fed is going to relax. They're getting a little dovish. No, nobody's going to do that. They raise or lower their prices based on competition and based if they got people coming in the door or not. Offer the hope of reduced rates. Offer the hope of reduced rates. Some folks will change their behavior related to banks, bonds, and other issues that right now seem to be in a position where they might really tank the economy. Okay, so was that worth $5 a month or $10 a month? Please join Patreon. Check out my earlier conversation today with Larry Goldberg, where he explains how Tesla now, a whole nother division, a whole nother money-making approach, they can go out and become a tier 1 supplier across the board of all kinds of the tech that they have now that is 2, 3, 4 years ahead of the other companies. This is not abnormal. The automotive companies, the OEMs, the legacy companies, the startups, they trade with each other all the time, right up to and including the entire car. They white label the entire car. Toyota makes the car for this guy, and Volkswagen makes it for this guy. I mean, this is normal. And they sell the parts as well. Even Tesla buys parts from other OEMs. This is normal. Tesla needs to be out there making this an opportunity and offer to trade tech, to offer factory solutions, to offer actual product, manufacturing product that these other companies need in order to catch Tesla. Why would we want them to catch Tesla? Because Tesla can't make all the cars. There's no way. They need to have other good competitors out there to help with the mission statement, which is transitioning the world into sustainable energy use as quickly as possible. So that's what Larry talked about. Here's the card. No, here's the card over here on this side. So please take a look at that video. It was really quite phenomenal. And then If you like any of what's going on here, you get a chance. You can look at these books, 4 books. All the audios are available. Believe me, the content. Listen, I can brag about When Friday Isn't Payday. It was ranked by Inc. magazine as the very best small business book on the market the year it was published. So don't take it from me. Inc. magazine said, and I just updated it a couple of years ago. The Elon Musk method translated into 5 languages, and it's been selling wonderfully for over 3 years now. The Elon Musk mission, I didn't even write the whole thing. I had 3 folks that you trust and respect, Brian Wang, Dr. Know-It-All, and Lars Strandritter. All 3 of them helped produce that book. You need to read the book. 20% of it is now passé. You know it already. 80% of it, believe me, you don't know it, and you'll be reading it and going, oh my gosh. And then Making Money Out of Thin Air. Actually, quite a few people who have joined Patreon over the last 2 or 3 weeks have picked Making Money Out of Thin Air. Why? Have you ever felt like I can never really be a good stock picker? I can never really quite understand Tesla. I can never quite understand these other companies on the stock exchange that I would like to follow or buy or short or whatever it is that you want to do, unless I can read their financial statements, unless I can read their profit and loss and really understand how it's put together, why it's done the way it's done. Well, all of that's in Making Money Out of Thin Air. And moreover, if you own your own business, or you help manage somebody else's business, or you're involved in any way at executive level aspects of another business, Making Money Out of Thin Air will help you how to make money out of thin air by just going and looking at the numbers, by, first of all, producing the numbers the right way, putting them into the P&L the right way and into the balance sheet the right way, because you can put them in the wrong way and mess yourself up completely. Just things like, for instance, using percentages on everything. A percentage of sales on everything that you do on the P&L changes how you look at the company immediately, just changes everything. And then once you've done that, you can look at certain numbers, and we talk about it in the book, and use those to change the business. And it doesn't cost you anything to change the business. And all of a sudden you're making more money. Shayla Chamberlain is an amazing CPA. That's why I picked her to help me write the book. She's also an MBA. And you might find after you read that book that you want to give her a call. And you might want her to be your CPA also for either your complex, if you have complex tax issues as an individual, or if you are running a small or medium-sized business. She's the ideal person to help you run the business. Okay, I think I'm done for today. I think I've done all the damage. Oh, I feel so much better. Been great talking to you.